how to remove private mortgage insurance from your mortgage if you have increased your equity. Hey guys, it's Mortgage Mel, and it's time for today's Mortgage Minute. Let's talk about PMI. When you buy your house with less than 20%, there is a private mortgage insurance that is required. It protects the lender from your defaulting. The less skin in the game that you have, the more risk for the lender. That's why they require it. However, can you get rid of it without refinancing or doing some other tricks with your mortgage? And the answer is yes. Step one is to go directly to your servicer and ask what their procedure is and if they do it. Most of them do, but there might be a rare exception out there, so you check with them first. You're going to formally request PMI removal based on increased equity. The servicer will then tell you if they allow appraised value PMI removal. Most of them do. The type of valuation that they accept, full appraisal versus some other form of appraisal, the process and the cost. You usually pay for the appraisal, and it's often $450 to $750. You order the appraisal through the servicer's process. You can't just do your own. You have to use their approved management company that they use for appraisals. Now I'm going to use a quick loan term. Loan to value is how much the loan is to the value of the property, and if you hit 80% or less. In other words, increasing your equity position to 20% or more, then they will likely get rid of that PMI for you. Things that your servicer will likely require for this process to happen. They will likely require on-time mortgage payments, no 30-day late payments in the last 12 months, no 60-day late payments in the last 24 months, at least 2 years seasoned on the loan. Some will allow sooner. No subordinate liens, so HELOCs or second mortgages. The home must be owner occupied, and the appraisal must come from their approved AMC. Some servicers have internal policies they require. 75% LTV if the loan is less than 2 years old. 80% LTV if the loan is 2 to 5 years old, and 85% if the loan is less than 1 year old. Rare but possible. I hope this information helps. If it does, give me a like and a follow, and I hope you have a great day.